All right, hello traders and welcome. So what we'll do today is go over some of the what I consider the building blocks that are essential for traders. And we've got a full course that's coming out, well over 100 different lessons in there, everything from saving and investing to budgeting to car payments, home payments, insurance, all of that stuff we'll cover, but also how to become a trader, differences between trading and investing, building your plan, risk management, trade strategies, going really in depth on strategies, mindset, all of that stuff we're going to cover in our course for our members. But one thing I wanted to share with you today is one of the pieces to this course that I think are really unique, and I thought you would get some good value out of this. I wanted to share those with you today. So I'm going to cover what I think are the five essential building blocks for successful trading. And I really want you to have a good framework for building a strong foundation in training. It's going to focus on mindset, on skills, on tools that you need, and strategies that you need to achieve success. So let's get into that. I'll share a little bit of the screen with you. We'll walk through it together. I'll also give you some actionable strategies that you can take with you. So if you stick around, this won't be super long, but I want to cover these five with you. So let me screen share it and let's get to it and jump into it. All right. So the first part of this is really the building block number one is developing that winning mindset. And I'll tell you, mindset is so critical, so important for traders. Okay. Number one, discipline. I want you to stick to your trading plan regardless of the emotions or the market noise that are going on there. The news, the noise, all the other people, the traders, the FOMO, everything that you're seeing out there. You need to stick to your trading plan. If you don't have a defined trading plan, you got to build one, right? But part of that mindset is, mind, you got to have discipline. Days like today in the market where the market's down, are there bargains? Are there deals? Are your stocks down? Are you disciplined enough to stick to your plan, okay, and not try to chase stocks? The next key trait here for success is patience, waiting for those high probability setups instead of over trading. I mean, do you have the patience to wait? A good example on this was yesterday. One of my strategies is to sell SPY leap puts, and I do it every single Monday. Okay. But I waited to the end of the day because I was just patient. I wanted to see how things played out. I didn't want to jump in early in the day. I wanted the things to play out, and I was patient in my setup, not trying to time the market. Okay. But I really want to be patient and just not just jump into trades because, oh, the market's down, the market's up right away. Just be patient, trade your plan. Okay. Consistency. Boy, I can't stress enough how important this is. You need to stay consistent. Don't skip from strategy to strategy. Stay consistent with adding trades and letting the probabilities play out. Too many times I see traders starting a strategy and then they take a loss and then they quit. Oh, you know what? This is terrible. I don't like it. Okay. Or they take two losses in a row, or they take three losses in a row, or they make three or four wins and then they lose two and then they still quit. Okay. You got to let the probabilities play out. If you put a tested strategy together that works over time, you have to let it work over time. Keep putting on trades. Trade small, trade often, trade consistently out there. And then last one here is resilience. Accept that losses are a part of the process and learn from them. You're going to lose. Nobody wins every trade. It's okay to lose trades. Okay. Clean them off, forget about them, learn from them, move on. All right. So some common psychological challenges that you may face: fear of missing out, FOMO. Man, you see everybody on Twitter and Facebook and stuff. They're putting these trades on and they're doing great or they're making money, and you just want to jump in and trade just like that. You gotta really focus on not doing that. You can't also have overconfidence after wins. Hey, I won a bunch, so now I don't longer need to even worry about hedges, or I don't need to worry about sizing. I just keep winning. Let's just, crank it up. Or revenge trading after losses. Got to avoid that as well too. You take a loss, don't try to get it back. Losses happen. And again, it's part of the process. Okay? You take the loss, you consistently put on a new trade, and you keep going. Okay. And then again, that giving up, that resilience, that giving up on a strategy after a few losses, that is what's going to murder most traders out there. That's why most people fail is they simply give up on a strategy after a few losses or a big loss. Okay. Maybe you traded too big, you did something wrong, you didn't see the bus coming and you got hit by it. Okay. You know what? It's happened to me multiple times over the last 40 years of trading. It's all good. You learn from it, you move on. All right. And then some actionable strategies again, some daily affirmations to reinforce positive beliefs. Understand that you are going to lose. You are going to be a great trader, though. Being positive about, I'm going to learn something new today. Every single day is an opportunity to learn. Every single loss is an opportunity to grow. Wins are great, okay, but I'm going to stick to my plans. Journal every trade out there. Make sure you're tracking all your trades. What were you thinking when you put it on? What's your emotional states? Okay. And then take breaks to avoid burnout and over trading. I mean, if you take a couple losses, take a break. I mean, be consistent if that's what requires of that trade. Okay. But take a break for a minute or two. Step back. Don't try to get it all back. All right. Next one here, building block 2, mastering risk management. Use stop loss orders. So some core things for you. Use stop loss orders to limit losses. You should have a stop loss. Use it. Set maximum BP allocations to limit risk. How much BP are you going to allocate to each strategy or to each trade? Okay, limit the amount of BP that you're using. Third piece here is hedge what needs to be hedged. Okay, not everything needs to be hedged. If you're buying or making some certain types of trades, you don't need to hedge every trade. If you've got a stop loss built in, okay, and you sized it appropriately, you really don't need to hedge that. However, if you're campaign trading, you've got multiple layers on, you might have to then hedge what you're doing. It's really up to you and your risk tolerance. All right, position sizing. Only risk 1 to 2% of your account per trade. Depends on the size of your account and what you're doing. Maybe it's 3 or 4% for small accounts, but really size appropriately so that you're not losing more than 2% of your account per trade. It's all good. Use a position size calculator to determine the appropriate amount of capital per trade. Understand in your strategies, and we do this with a strategy builder that I have. Okay, I know exactly what allocation of my portfolio is going to which trades and each trade individually within those. So I know exactly how much I'm allocating every single trade that we have. And then adjust your position sizes based upon volatility and the account size. What's going on in the market? What are you seeing? Is your account growing? Okay, then maybe you need to adjust. If your account is suffering some losses, maybe you need to shrink. Okay, so a couple things here from an action plan standpoint. Set predetermined levels of risk for every single trade that you have. Include risk management in your trade plan. Your trade plan needs to have risk management sizing principles. How much BP, stop losses, risk per trade, all of that. And then review and refine your risk management plan on a monthly basis. All right, so moving on. Building block number 3, developing a robust trading strategy. So this is really my wheelhouse here. It's one of my favorites. You've got to have a plan. Okay? You've got to develop a plan. Okay? And you've got to work that plan. You can't be jumping around from one person's to the next, to the next, to the next. There's great ideas out there. Maybe you get an idea from me. Maybe you get an idea from somebody else out there. Okay. But before you go and implement it, you got to back test it. You got to test it, and then you got to build your plan around it. You can't copy other people's trades. Okay. Yes, we have an alert service in our Discord, but it's mainly to give you ideas, not for you to copy them verbatim. You don't learn anything by copying other people's trades. You learn the strategy first. You back test this here. So strong strategies are based on sound logic, back tested data. They're consistent and adaptable to changing market conditions. They include a clear entry, exit, management, and risk parameters. And it has to fit your trading style and goals. What's your trading style? And my trading style is I'm going to retire and I just want to generate 1 or 2%, 1% a month in income or something like that. And I'm retired. I don't want to take a lot of risk. Okay. Then trading, long swing trades or short-term swing trades may not be the best strategy for you if you're trying to preserve income or to preserve your account and generate income. Maybe it's also not risk high leveraged futures or other types of trades with your retirement accounts. Okay. It's got to fit your style and your goals. Some strategies here, again, premium selling strategies, which is what I love, where you're capturing income and premium from high probability trades. Okay. I like higher probability trades that win often, that I can count on over time, and I want to just capture that theta, capture that premium. I have multiple ways to win, whether the stock goes up, the stock goes sideways, or even dips a little bit. I have multiple ways to win. Also, there's swing trading. There's other strategies out there, but maybe you want to take advantage of short-term price movements and you want to swing trade. Whatever you want to do, okay, come up with strategies that fit your style, your goals. So first thing I want you to do here to implement this is go out and back test some strategies and use some historical data. How well does that strategy work over time? There are several tools out there for back testing. Okay. And then keep refining based upon your performance. How are things going? Well, maybe a 50% profit target and a 2x loss is not a great idea on credit spreads because if you're winning 80% of the time, okay, and you lose 20% of the time, and you're losing 4 times more than you're winning, you're going to break even over time. So again, you might need to refine that strategy or what you're doing so that you can put the positive expectancy into your favor. All right, number 4 here, technical and fundamental analysis. Okay. I think it's important to use technical analysis. Okay. You don't have to get crazy about it here, but I think technical analysis gives you a little bit of an edge. Okay. On any given day, the market's got a 50-50 shot of going up or down. We get it. But if you're looking at trends and momentum, if you can maybe put the odds slightly in your favor that, hey, we're on a trend and in these for the near term, we should be moving higher. If you're investing for the long term, you're utilizing trends because you're thinking the market's going to go up over time. So chart wise, look at candlestick patterns. You don't need to know a million of them. Get a handful of candlestick patterns that you can look at, maybe either a daily or a weekly basis. Look at support and resistance levels, and then use some indicators like the RSI, the MACD, Bollinger Bands, and potentially some EMAs. You don't need a ton of them. Okay. These 4 things, okay, as well as support and resistance levels on candlestick charts, is all that you need to give yourself what I feel is at least a little bit of an edge. And then also make sure you're looking at multiple different time frames, short term, medium term, long term. If the long term chart is down and something looks like it's positive in the short term, okay, you might get a quick bounce. But if you're selling premium 45 days out, it was something that's in a longer term downtrend, that bounce may only last a little bit of time and then it reverses and continues its trend. So you really have to get a sense of what you're trying to accomplish and what those time frames are. Fundamental analysis as well. Economic indicators, maybe having at least an understanding of CPI, GDP, what are the interest rates doing out there, having some sense of what's going on there. Again, you don't have to put a ton of faith in those, but at least understanding when they're coming out and how they could potentially influence your trades. Looking at company earnings reports. If I'm trading stocks, okay, I'm absolutely only going to trade about 10 stocks. My watch list is about 10 deep, okay? And I focus on revenue, earnings, and consistent growth. Okay. I want to see revenue going up over time. I want to see earnings going up over time. I want to see price going up over time on a pretty consistent basis. I am not playing high volatility junky names, even though you can wheel it and make 10% a day or 20% a month or whatever the heck people say out there. Okay, I'm just plowing along at 2 to 3% a month, and that's the goal. All right. And then maybe some sector and industry trends if you're trading stocks. Okay. I want to look, is the sector positive? Okay. Well, if the energy sector's falling hard, why are you buying Exxon or Chevron or something like that? Okay. Don't fight the trend. Okay, look at the sectors and the industry trends, okay, and find the strongest names with the best fundamentals that fit the technical analysis, and you're in good shape. So again, combine both approaches. Fundamental analysis can help you identify opportunities in high quality assets, especially stocks. Okay? And then use technical analysis to determine your entries and your exits. Pretty simple. So what do you do here? Create a checklist for analyzing trades. What is it that you want to look at? What's important for trades? Again, for me, it's revenue and earnings growth. Okay. I really want to see those two things. It's debt. I want to see companies that don't have a lot of debt in them. And then I also want to know what is really the intrinsic value, the PE for those, or the PEG ratios of those companies. That gives me a sense of, okay, I'm going to trade quality here. And then we'll use my technical analysis. Okay. All right. Last one, building block five, continuous learning and adaptation. You need to really buy into the growth mindset that I'm going to learn something new every single day and move forward. So, number one, have a commitment to growth. Read as much as possible on trading and mindset. Attend webinars, courses, trading seminars out there, and join a trading community so that you can learn with other people. And if other people give you feedback, I'll tell you what, the best thing for me ever, okay, my trading turned around when I found a group of people that were fairly like-minded, okay, but they would give me feedback on my trades because you can't see the picture when you're inside the frame. You might think you know it all, okay? And you might think, oh, if I get all this free information, and there's some good free information on Facebook or YouTube. There's also a lot of garbage and junk out there. Okay, you got to take it with a grain of salt, but get into a group where you can post your trades, get feedback on your trades, and improve your trading and see what others are doing and how they're going about it and how they're handling different aspects of the trading strategies that you might guys may be sharing. I can't say enough about communities. Okay, it's so important. It's not finding a mentor, it's finding a community of people. And you want to be in a community of people that are smarter than you. Because if you're the smartest person in the room, you are in the wrong room. You've got to find a group of really smart people and start to work with them. All right, so and review and reflect here. Conduct weekly and monthly trade reviews. Look at your at the end of the month, what worked, what didn't work. Every couple months or every quarter, what's working, what's not working, should they be tweaked? Look for patterns in your wins and losses. Adjust your strategies based upon performance data. It doesn't mean quit them and doesn't mean tweak them every week. Okay. But over time, what could have made it better? Why did this not work? Everything's an adjustment, everything's growth for you. All right, some tools for growth here for you. Number one, books. Read, read, read. Read trading classics. Trading in the Zone by Mark Douglas, a great one on mindset. Everyone should read that. Software. You should have a good charting platform and also maybe software that has really good back testing capabilities. So you can model and test out strategies before you implement them. Okay. Mentorship. Find experienced traders or a group and get into it in that community as well. So join a trading community of like-minded traders. Okay. Find some people that are going to make you better. They're going to challenge you and push you more. All right. Last couple things here again. Success requires a combination of mindset, risk management, strategy, analysis, and continuous improvement. You can build a solid foundation out there by mastering one block at a time. Just pick one of these. Is it mindset? Is it technical analysis? Do you already have a plan? If you don't have a trade plan, okay, build that thing first. Okay, then work on your mindset. Then work on your risk management. Okay, pick one block, work on it at a time. Remember, trading is a journey, so embrace the process and stay consistent. Don't give up and don't be looking for the holy grail and keep tweaking it. I see too many people out there changing their strategies. Well, one quarter someone's doing this and then he or she changes it and they do something different and then they do something different again and then they do something else. Okay, and they're just flailing around out there because they can't lock in on something because every time they start to take some losses, okay, they bail out because mindset wise, they don't have the discipline, the patience, and the consistency to let things work. All right, last thing here, review and apply one building block a week. Set some measurable goals to track your progress, and then reach out to peers and mentors to discuss some challenges or highlights. And if you're not in a trading group, find one. You can join our Discord. We'd love to have you if that helps your trading. Lots of really great people. I get feedback all the time. A lot of other traders get feedback. They post their trades, they post their trade plans, they post their ideas. It's a great community. There's many others out there. Find one that fits you and what you want to do out there, and that's going to make you a better trader. All right, I hope this was helpful to you. If you like this video, please click the like button down below there and let me know. that you like this video. We can get that out to more people. If you're not a subscriber, subscribe to the YouTube channel. At least get some ideas, improve your knowledge, find some takeaways from what I'm sharing with you on my journey and what I'm doing. I'm going to win. I'm going to lose. I'm going to share it all with you. Okay. I've shared every one of my wins, every one of my losses. I share my daily P&Ls with you for them, on my different accounts. Okay. You know exactly what's going on, right? If you want to get some more ideas, join and see what we're doing. And if you really want to see the inner workings and really get the education level and you want to check out this course and some of the other things, come and join us in the Discord. We would love to have you there and find a great community of people that you can learn from. All right. Take care, everybody. Have a great evening. Bye bye.